Because of the enhanced inflation risk associated with all currencies, gold prices are rising globally. However, I believe the danger is particularly high in the United States due to the possibility of losing its reserve position. There is absolutely nothing to lose because no other currency can compare. Only the United States stands to lose. And that one thing is the very foundation of our entire illusion of prosperity. The whole consumer-based economy that relied on reserve status is about to collapse if that status is removed. It is not only random market noise that gold's price has exploded above $4,000. The US dollar and all other global currencies are clearly showing signs of structural weakness. The same dangers of uncontrollable inflation and unpayable debt are threatening all central fiat systems in the world today. The dollar's reserve status, which has supported the US consumption-driven economy for decades, is about to expire, threatening the currency's position as a global trade anchor. It is plain to see why foreign central banks are quickly moving their money out of U.S. Treasury securities and into actual gold. There is a gradual loss of faith in paper currency. As usual, gold is the one who responds first. The next stage of the monetary reset will be signaled by this early warning signal. A prominent economist and proponent of sound money, Peter Schiff, elucidates the similarities between the recent breakout in gold prices and the early stages of the subprime mortgage crisis of 2008, while highlighting that the current threat originates from inside the dollar. He is right when he says that if you wait for a correction, you can lose out on the chance altogether. Rather than relying on paper claims, real wealth will be preserved in immutable assets. The excerpts from Peter Schiff's interview are now presented. Prior to proceeding with the discussion, kindly subscribe to our channel and enable the bell symbol to receive timely updates. Take pleasure in the video. I'm grateful. The US dollar system and the US sovereign credit are the most vulnerable parts of the global monetary system, and gold is the most vulnerable asset in this regard. Similar to how subprime was the initial point of exposure, gold is where it is most prominent. The remainder unfolded at a later time, but many were quick to dismiss it because they hadn't seen anything yet. There hasn't been a greater spike in basic metals, that's true. Their price has increased, but it hasn't surpassed that of gold. Although bond prices haven't risen dramatically, they have risen. Although the Federal Reserve has been reducing short-term rates, long-term rates have risen. I take it that has already transpired. Even before the Fed rate decreases, the mainstream did not anticipate that rates would climb. Not only did I anticipate that, but so did almost no one else. Thus, we have already witnessed its inception. The dollar hasn't dropped in recent months, and bond prices haven't dropped much, but it's down around 10% year to date. By any measure, the dollar's current decline makes this the worst year for the currency in the past half-century. Although it hasn't plummeted any further in the past few months, that doesn't change the reality that it has already fallen significantly. Rest assured, none of the other things mentioned by Larry Kudlow have come to pass, so there's no need for concern. All of them will occur. You simply do not give it any thought until it has already happened. So now you're fretting over it. Those who are currently fretting over it are really purchasing gold. Do you not see that as their action? Therefore, gold prices are on the rise due to the impending emergence of significantly higher inflation as a result of the dollar's inevitable devaluation. For what reasons do you believe that central banks abroad are looking to unload their dollar holdings? Why on earth would they want to trade them in for gold ones? Reason being, they have crystal ball vision. This debt bubble is visible to them. We will never be able to afford it, as they can see clearly. Therefore, they seek to separate themselves from the danger. Accordingly, gold is leading the pack, and your financial well-being is at stake if you choose to disregard this warning. To what extent do you pay attention to it? You do your own shopping for precious metals, don't you? These mining stocks, which were up again today, though not nearly as much as they should have been, or if you don't already hold it, you should acquire more of them. While some equities did experience gains, notably silver equities, the majority of royalty corporations saw losses for the day. Stock investors are still wary, so several equities failed to reach fresh highs. They hold on to the hope that things will be rectified. Since there have been numerous reports of gold reaching $4,000, it is possible that there may be a minor correction. If it drew back $100 or $200, I wouldn't be shocked. That might change now. Since many consumers desire a correction in order to make purchases, the absence of one may come as a surprise to everyone. The truth is that way. Many investors are holding out hope for a drop in the gold market before putting their money in, and that's why it's possible the fixes won't arrive. On the other hand, they might show up, but they'll be brief and uninteresting, so it won't be worth your time. However, gold stock investors remain wary. And so, yeah, I suppose they likely anticipated that gold would be sold off before to its 4,000 mark. Now that it has broken 4,000, maybe they think it will sell off, but time will tell. I mean, we could skip 4,100 and 4,200 and get right to 4,500, or maybe we'll circle back to 4,500. Something far more significant is happening at the moment that the general public is completely oblivious to, so maybe we'll skip over 3,000 and head straight to 5,000. Similarly, they were bewildered by subprime. We are witnessing a monumental shift here. Invest in gold. The time is now. My sincere wish is that all of you who have been tuning into my podcast have a little gold in your possession. You can't have silver without it. Going to shift gold tonight to get more is a good idea if you either don't have any or don't own enough. Yeah. After reaching 4,000, it may decline again. But guess what? By itself, it won't be able to pull back far enough to matter. Whether you get it at 4,220 and it drops to 3,900 or 3,800, it won't make a difference until it's 10,000 or 20,000. Buying it at 4,000 could be risky if you change your mind. No matter how long you wait, 3,800 never arrives. You still haven't purchased it, and here we are at $5,000. Therefore, you must purchase it and immediately divest from these U.S. equities and bonds without a doubt. There is, in fact, none justification for possessing our bonds. I mean, that's where the destruction will be most severe, but you must free yourself from our bonds. You need to get out of our stocks, but the money won't come out of it, can it? The money you get from selling stocks and bonds could fall much further in value, so it's not a good idea. Therefore, you should invest in real assets outside of the US. Foreign stocks that pay dividends are a must. You should be the owner of goods. Owning gold is a must. Preventing what's going to happen is your first priority. Because they aren't aware of the danger, the majority of people will be helpless. Their lack of comprehension of the problem's nature explains why they are dismissive of it. They believe our economy is excellent. Yes, we do have a bubble around us. Because of inflation, we are led to believe a delusion. Even more inflation is Trump's plan to keep that illusion continuing, but surely that will fail. We can't afford to utilize inflation to hide the issues it causes anymore. There's already too much of it. That is, once again, the message that gold is trying to convey, that we wind up taking too much of it. That's the reason behind its current trajectory and why it shows no signs of abating. With a 54% increase so far this year, gold has had one of its best years since the 1970s, a time of great monetary turmoil that saw the demise of the gold standard. The decoupling of the US dollar from gold in 1971 caused inflation and a period of worldwide economic reshaping that followed. A claim on actual money, a fixed weight of gold stored in US vaults, was what dollars had stood for decades. However, after convertibility was removed, verbal assurances took the place of actual worth. The outcome was bound to happen. The value of currencies worldwide declined as governments shifted to debt-based systems supported by rhetoric rather than actual economic strength. That same loss of faith is reflected in the skyrocketing price of gold today. This shows that central banks and investors are starting to see through the facade of stability created by fiat currency once again. Gold is only regaining its historic position as genuine money in a society awash with IOUs, while the dollar's reputation, which was based on decades of faith rather than gold, is crumbling. Please return to the interview. Actually, gold's price is up 54% so far this year. That is a really significant change. The year is far from over to begin with. We are far from done with the fourth quarter. There hasn't been a calendar year since the 1970s when gold prices were this high. There was a very formative era there. Additionally, silver experienced an even steeper percentage increase today. As a matter of fact, its peak price was more than $49.50. It has fallen below $49 again either this morning or at this very moment. Around $48.80 is where I'd put it on the market. However, silver's intraday high was above $49.50, putting it dangerously near to $50, a crucial milestone. Nevertheless, if you're looking for a year when gold performed as well, you'll have to travel to the 1970s. After all, gold didn't have a terrible year either. Last year, gold had a fantastic year. It's just that this year has been really fantastic. Naturally, a 54% change from gold's dollar value is a substantially larger change. When you consider that the metal in question is already in the middle of the 2000s and is going up to $4,000, you can begin to grasp the magnitude of the transformation, the increase in the value of all the gold amounts to a substantial sum of money. What is happening now is probably just as important as what happened in the 1970s if you have to go that far back to find something similar. What then transpired throughout the 1970s? This is something you must grasp, since Nixon weaned us off the gold standard in 1971. We didn't turn back on what was meant to be a short-term relocation. It's been almost 50 years. It was a huge deal, though, because prior to 1971, central banks around the world could easily swap their US dollars for gold by returning them to the US government. This meant that any country's currency reserves could be maintained in reserve. The pricing was set in stone. You could buy 1 ounce of gold with $35. To put it simply, each Federal Reserve note was like a receipt redeemable for 1 ounce of gold. If you wanted to exchange your $35 for 1 ounce of gold, you could do so. While you wait, you could invest that $35 in US Treasuries and receive income, an opportunity you wouldn't have with gold. However, we were the guardians of your gold when you entrusted it to the Federal Reserve or the United States government, as was essentially the case around the globe. The German, Italian, French, or British government contracted with the United States to store their gold, and in exchange, we gave them a warehouse receipt denominated in US dollars, which served as a pay to the bearer upon demand. Obviously, everyone does it once, doesn't they? You could turn your paper into gold regardless of your nationality, couldn't you? Prior to 1933, all citizens could redeem the original Federal Reserve notes for gold. The official price of gold back then was $20, hence this person was an American citizen. So you could exchange a $20 note from the Federal Reserve for a $20 piece of gold, could you not? It was a fair trade. An irrevocable bond for gold was therefore symbolized by that document. That was the paper's redeeming quality, after all. The backing it had was the gold. At the time, 1933, Americans were unable to exchange their notes for gold, but foreigners were able to do so when Roosevelt ordered everyone to surrender their gold and made it illegal for Americans to own gold. The only people who couldn't get their hands on the gold were Americans. While this was the case, foreign holders may still acquire gold. Finally, Roosevelt depreciated. Therefore, instead of $20, you would need $35 to purchase 1 ounce of gold. However, foreign central banks or individuals located outside of the US who possessed US dollars could still cash them in. The currency wasn't even on the pieces of paper. The currency was the gold. A pound of gold was once considered $1. This piece of paper is an interbank obligation, IOU, for dollars issued by the Federal Reserve. Cash was worth more than gold. They were silver as well. Although owning gold was against the law in the United States, owning silver was not. Their certificates were silver. Prior to the removal of silver from circulation in 1963 and 1964, as well as its subsequent elimination from coinage, the Federal Reserve issued currency backed by silver. You could turn a $1 note into 4 quarters, so you could buy silver that way. Did you know that the 4 quarters were actually silver? So all it took was a trip to the bank and some change for you to turn your paper money into silver, correct? Actually, you might be able to earn some cash. True money can be yours. Could you acquire silver dollars? An item of debt, the Federal Reserve note was. Actually, the Federal Reserve note doesn't specify whether it's $1, $5, or $10 if you read the text. On demand, $10 is to be paid to the bearer. 1 ounce of gold or silver is worth $10. It is thus an IOU. Foreign central banks actually held gold in their US dollar holdings until 1971. Their only action was to keep it in Fort Knox, the United States. They had their gold stashed away. They received this IOU from us. U.S. Treasuries were purchased with that IOU, though. Since their original intention was to retain ownership of the gold, this means they can now earn interest on it. At any time they want, they might obtain it. However, interest could be accrued throughout that period. Now, the world's monetary order was severely disrupted when we abandoned the gold standard, and it caused the US dollar to plummet in value compared to gold, as well as other currencies, including the Deutschmark, Swiss franc, Japanese yen, and pound sterling. Simply put, dollars were a form of money backed by gold until 1971. Dollars had no value after 1971 since they were unbacked. A money that is not backed by anything is obviously not worth as much as a currency that is backed by something, particularly gold. As a result of our regulation change, the dollar was devalued over the globe. You will not receive your gold, as we informed everyone. Essentially, we were in default. In reference to the debt ceiling, it is worth noting that the United States government has never defaulted on its treasury. Federal Reserve notes were lost due to our default. A Federal Reserve note is simply a promise to pay. That's why it's called a note, right? What is the commitment of the Federal Reserve to pay? Could you please tell me what they are guaranteeing to pay you if you own one of their notes? So at first, they said they'd pay you in gold, didn't they? Legal bucks. They said they would pay you. That was the assurance given. The Federal Reserve notes, however, are now worthless. I am completely free of any obligation to you. This note is all that is said. The redeemable value is not specified. Thereby, we were unable to pay the bills associated with those notes. Everyone was holding on to our currency because we promised to pay in gold. Then we went and told everyone that we're not paying anything. We didn't even promise to give you $50 or a quarter. Remember how we said we're not going to give you anything? For these notes, we will not be parting with any gold. It was completely default. It is not a coincidence that gold is once again the dominant metal. It is a decision. The world's economy has been resting on empty promises for more than 50 years. Those assurances are now starting to fall apart, as more and more people come to terms with the fact that paper money will eventually revert to its original value of zero. Each new record high in the price of gold reflects this trend. The 1971 financial order is mathematically about to collapse. There's too much debt to pay back, inflation is too strong to ignore, and politicians are in too much of a bind to do anything. Despite expectations, gold prices are staying flat. Cryptos are losing value. The next period of gain or loss will be defined by the gap between those with physical assets and those whose wealth is based on paper as this cycle gains momentum. Feel free to chime in with your opinions on his analysis down below. Please subscribe to our channel and enable notifications so you don't miss any of our future videos if you enjoyed this one.